What's up, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be going over 5 stocks that I have been buying in the month of September 2022. So let's get started with this. And if we take a look, we're going to start with Walgreens. This is a stock that I've owned for a long time, probably close to 2 years now. And as you can see, I started buying a little bit too early. My average cost is $47.75, and I owned about 94 shares of this stock. So now the dividend yield is up to about around 5%, which is really good. And Walgreens, as you can see here, the last 5 years, the stock has not been performing well for a couple of reasons. One of the threats to this company in the last couple of years has been Amazon. There's a lot of articles out there that say, Amazon's efforts to get into the pharmacy business is going to be a huge threat to Walgreens and, other companies like CVS as well. But I feel like although that's a possibility, it's a little bit far-fetched. I mean, when you have a company like Walgreens that's been around for over 100 years, they have, thousands and thousands of locations all over the country. I just think it's a hard company to take down. Maybe they, take a couple percent of market share away, but a company like Walgreens is also one that it's where not only is it pharmacy, but it's also necessities that you need to buy. So if you need to get food or drinks or just simple stuff, you can go to Walgreens, right? So that's one stock that I do think is going to come back eventually. Right now, it's in a bad spot. The other thing holding it down is that they had a lawsuit recently regarding the opioid crisis. And so that's another thing too. That's a short-term thing though. So that's stock number one. Stock number two is going to be an index fund, the QQQ. This is one that I've been building up the last couple of months. 8 shares at an average cost of $318. And I just feel like I want to have a decent size of my portfolio invested into an index fund. And the QQQ is one that is going to be one that is pretty much goes up not every year, but over the long term, you don't really have to worry about losing money in this one. This is kind of just you average 10% a year and you let it sit there and do its thing. So that's the QQQ. Next up is Starbucks. This is one, I think I started buying this about a month ago, and I got in at a pretty good time. You can see here it bottomed at $71 a share. I bought in at $75 a share, and I own almost 27 shares of this stock. And then ever since then, it's in the last 3 months, it's up 25%. So I've already made a couple $100 on this stock in the last 3 months, and I wish I would have bought more. Part of the reason I didn't buy more was because I didn't have enough money laying around, but I'm glad I got the position I did. And I think, it's Starbucks. So this is going to be one that will come back to $115, $120 a share. I also saw they came out with news the other day that they're opening 3,000 stores in China. And so, of course, that's going to help. I mean, any Starbucks you go to, even especially in my area, they have lines of cars in the drive-thru every single day, all day long, pretty much. So this is, Starbucks and their coffee is going to be something that stays here for a long time. So and the dividend is like 3% on this one too. So pretty good there. The next one is going to be one I started buying, a couple of days ago? No, maybe like a week or two ago. It's Intel. Intel is one of the biggest semiconductor chip players out there. Now, yes, I do understand that this is a stock or a company that has fallen behind relative to its competitors. Like, let's say, pretty much the main one is Taiwan Semiconductor Manufacturing. That is the big one that has, ate away a lot at Intel's market share. So I think Taiwan is a great investment too. But Taiwan the stock's not down like Intel is. Intel's at a 5-year low. Although Taiwan has also fallen, we can see here. So it's at like a 1 or a 2-year low, I think. Yeah, it's about at a 2-year low. And so timing, I think this is a good one too, especially it looks like today it's even falling more. But the difference is that Intel's at a 5-year low, this one's at a 2-year low. So I understand this might be a better company. You could even say, they're growing a lot faster, but the difference is that I don't think Intel is going to be trading at that cheap of a valuation for very long. And they also are one of the companies that are going to be benefiting from this $50 billion CHIPS Act that came out a couple weeks ago. That's going to help Intel, and then it could help Taiwan as well. Taiwan is also building a factory in the United States in Arizona, but the difference is I heard, there's the possibility that China buys out Taiwan or something like that, because it's kind of like there is some, rivalry going on between China and the US in regards to semiconductor chips. So you have to bring that into consideration. Intel is an American company, Taiwan isn't. So there's a little bit of a difference there. And then you also have other companies like the NVIDIA, AMD, Micron, Analog Devices, all those other chip players, Qualcomm, those are all great companies too, but they're on a different level of the chip maker process. So it's like at the very top, you have ASML. That's another great company I would like to invest in. ASML is pretty much almost has a monopoly. They are the ones who can create chips that nobody else can create, not even Intel or Taiwan. So Intel, then you have Intel and Taiwan in the second tier, and then you have all the other companies that just design the chips. Intel can design the chips and manufacture them. Taiwan, I believe they just manufacture, and then all the other companies like Qualcomm and AMD, they just design them. So they're like one of the bottom tier customers. But yeah, I think Intel is going to come back. I don't think it's going to stay under $30 a share for long. And yeah, I think look at the last 5 years, it pretty much bottomed out at about $44 a share, every year. And so I don't think it's going to stay at this point for too long. So that's Intel. Then the last one on my list is one I just bought today for the first time ever, and that's Adobe stock. Adobe fell 16% today. Let's see. And this one I bought 5.5 shares at $309 a share. So we can see here that, well, I hope it's not $195. It's here we go. It's 307 today. Okay, so it fell 17%. One was earnings outlook, which is not a huge deal. The second one is because they are acquiring a company for $20 billion, and that is a giant purchase, right? So how these things normally go is when one of these big corporations buys out another company for billions of dollars, normally investors don't like that because that's going to cost them a lot of money. It's going to hurt their balance sheet. And in the short term, it doesn't look so great. But as time goes on, it actually turns out benefiting the company in a big way. And regardless, Adobe has enough of a moat around them where they're not a company that can be easily replaced. This company they're doing about $5 billion of earnings per year. And right now the company's trading at about $140 billion valuation. So this is at a P ratio of under 30. And normally this stock trades anywhere from a 40 to all the way up, to a 60 or sometimes even to an 80. So this is another stock that I think is going to come back. And yeah, we'll see how this one goes. But those are my 5 stock picks for today. Thank you for watching, and I will see you in the next video.